Good morning, everyone. Welcome to our convening with Edelman and the Strategic Investor Initiative to overview our work on communicating long-term plans and our learnings to date. In this webinar, we'll give an overview of the learnings on long-termism. We'll share our work collaboratively from the Strategic Investor Initiative and Edelman. We'd also like to receive questions from the panelists. As you'll see in the bottom of your screens, there is a Q&A function. Do submit questions in writing as the webinar is ongoing, and we'll get to those questions at the end of the webinar. And any questions that we can't get to in our time, we're obviously happy to respond to following the webinar, but looking forward to hearing your comments and questions on this content. Our speakers today are from the Strategic Investor Initiative and Edelman, as you'll see on the next slide. My name is Brian Tomlinson. I am the Research Director at the Strategic Investor Initiative. Our work is focused on reorienting our capital markets towards the long term. We do that through working directly with corporations and institutional investors, and have built a base of research to guide corporations as to how they can talk more about long-term themes in their investor-facing disclosures. Over to the Edelman team to introduce themselves.
Thanks, Brian. My name is Lex Savanto, second picture on the page. I run Edelman's financial communications and capital markets practice. We have offices in markets all over the world and a team of about 75 people in the U.S. just focused on financial communications. But to sum it up, we help public companies, large and small, think about how to articulate their strategy in order to achieve fair market valuation. And more, our clients are interested in cultivating investors, long-term investors that are interested in a more long-term story, and what that requires is more and more we're helping companies think about how to articulate their strategy and their value creation roadmap in a multi-time period, multi-year context. Lauren?
Great, thanks Lex, and good morning everyone. I'm Lauren Scott. I'm a member of the Financial Communications and Capital Markets team on the West Coast. I specialize in investor relations, so helping companies with normal course of business, earnings, as well as special situations, which would include everything from an investor day to an M&A situation or CEO succession planning. So happy to be here today and looking forward to sharing our thoughts with everyone.
Terrific. Thank you for those introductions. So on the next slide, we'll talk a little bit about some of the key motivations on both the corporate side and the investor side for engaging with this work. So in our work, we've heard that there is a very broad-based concern around the impacts of short-termism on corporate behavior and the capital markets. CEOs in our surveys have said that over 80% of them consider them to be too short-term in their own practice. Institutional investors have indicated that only a minority of their portfolio companies are doing a good job in communicating their long-term strategy. The literature indicates that short-termism does seem to have real-world negative impacts. A seminal study in this area is that companies will seek to cut things like R&D and other discretionary spending in order to hit a short-term earnings target. Companies may also forego net present value projects in order to avoid a short-term earnings miss. So the equity markets interacting with managerial decision-making in a way that has negative long-term impacts. There is a increasing body of evidence that seems to suggest that firms that look to the long term, but also focus on delivering good value in the short term, tend to outperform their peers. There are a range of studies by both McKinsey and KPMG that indicate that a long-term focus delivers value over the long term. We also know from our own research with George Serafeim and KKS Advisors that the capital markets do value long-term focused disclosures. And this context of long-termism, I think, sits into a broader set of concerns about the role of the corporation in society. So we see a bit of a normative shift going on in terms of the expectations of corporate behavior and to whom corporations ought to be managing their business. You've seen some of that in terms of the BRT statement recently. And also on the investor side, you've seen the rise of ESG. And as investors begin to embed ESG into their voting and decision-making behavior, they need more and better information from companies to allow them to do their analysis on their portfolio companies. So in our work at the Strategic Investor Initiative, one of the things we've been doing is trying to respond to these concerns around short-termism and also get away from something of a blame game around short-termism where corporations point at investors as being the source of short-termism and vice versa. So we've been convening CEO investor forums since 2017 to give CEOs an opportunity to talk about their long-term plans to generate value for their stakeholders, including their shareholders, over the long term. We've held 8 CEO investor forums to date. 30 plus companies from a range of sectors have delivered long-term plans, and they've generally delivered long-term plans to audiences in excess of 25 trillion in assets under management, representing a broad sweep of investor segments. So this is clearly a topic that both CEOs and investors are taking seriously and are trying to engage with. So on the next slide, you'll see some of our learnings from working with companies and helping them prepare their long-term plans. And on the left side of this page, you'll see that CEOs have indicated a series of key motivations for why they have sought to engage with us and deliver a long-term plan. One is to try to get beyond this frustration that's felt around the existing sort of reporting architecture. You know, the earnings call can tend to dominate the discourse in terms of value and performance, and that forum is necessarily somewhat short-term, and the questions that are asked on that call tend to relate to short-term metrics. So companies are seeking forums in which they can expand their value story and get beyond what has been described as some of the sort of quarterly earnings hysteria. Also, companies are looking to overlay a coherent narrative into their disclosures. You know, we've seen a major expansion in the reporting ecosystem of companies over the last few years. We looked, as we tried to complete the key elements of a long-term plan from a company's existing disclosures. In order to do that, we had to look at over 13 individual disclosure documents across both mandatory and voluntary reporting frameworks. So that is obviously a broad sweep of disclosure forums in which to have to engage in order to understand a company's narrative. So there's an interest in companies pulling a narrative around the long-term value together and making that coherent and clear. Also, companies are looking to demonstrate leadership in this space. I think you can see from the demand for better investor information, the BRT statement, the changing norms around the purpose of the corporation. It's important for companies to get out in front of these issues and tell a long-term value story. And then there is this sense that companies also want to attract longer-term focused investors in their investor base. You know, there's excellent academic evidence that indicates that the way you disclose affects who holds your stock. If you reorient your disclosures towards a longer-term setting, for instance, by moving away from delivering quarterly earnings guidance, focusing on a set of KPIs that have a longer term focus, you will over time attract more long-term investors into your investor base. We also have some testimonial evidence from our companies that that is beginning to happen. On the right side of this page, you can see some of the broader motivations for companies to deliver a long-term plan and address a broader set of themes and talk about how they drive value over the long term. This was a piece that was published in MIT Sloan Management Review if people are interested to read that. On the next slide, we talk a little bit about the frequency with which a company should seek to talk about its long-term strategic plan. Excuse me. And we've identified that as a company seeks to set out its strategy and its plan to deliver value over the long term, this is something that should be updated with the markets, ideally annually. And that will be subject to review and then periodic refreshment in a way that reflects the underlying strategy review process within the corporation. And we have seen companies coming back to us at the CEO Investor Forum to seek to deliver updated long-term plans. That's an early stage development for us, but it does indicate that companies are seeing this as a useful instrument to tell a longer-term value story to the market. We do see that there are also significant event triggers for companies to engage with these long-term themes. We set out a number of items there. One is a recovery from a scandal as companies seek to set out a renewed value story and reassert their corporate purpose. CEO transitions, where a CEO may want to indicate the extent of continuity and change with their predecessor. And then, as you might expect, the outcomes of transformational M&A and activist defense are obvious inflection points for, again, engaging with the long-term plan. I know that Edelman had some additions on this theme.
Yeah, Brian, yeah, just to add to this as well, you know, when thinking about when to present a long-term plan, another great venue is an investor day. So the framework that CECP has created and, you know, the key elements that we'll walk through shortly should all be considerations when preparing for an investor day. Analysts and shareholders will be looking for a business update, you know, deep dive into segments and a guidance update. But they'll also want to learn more about your view around your corporate purpose, your governance structure, how you think about attracting and retaining talent, as well as, you know, a full assessment of kind of the risks and opportunities that you face moving forward. And then ultimately how these various elements will enable you to sustain long-term growth. So if you're thinking ahead to an investor day, you know, some of these elements will be very helpful in that.
Yeah, and we've seen some developments around companies embedding some of the themes of our framework and that extended time horizon in their investor day. A recent presentation by United Health Group is an example of that, and that's a trend that we expect to gain traction over the next year or so. On the next slide, we want to set out a couple of key elements to talking about these long-term value themes successfully. One is the internal processes for a successful long-term plan. Ultimately, the long-term disclosures that a CEO makes in front of an audience of investors are an output of an internal process. And in terms of the work that we've done with companies helping prepare these long-term plans, we wanted to set out some of the key learnings from that. So firstly, an increased need for cross-team collaboration, and really across those teams developing a shared understanding of what's important and what the CEO should talk about. We've seen particularly collaborations between investor relations and corporate sustainability have proved particularly useful, but also challenging, as often a sustainability team may have been focused on questionnaires and the sustainability report. Obviously, the investor relations team has held the relationship with the capital markets that has often not been fully developed in terms of ESG and sustainability disclosures, bringing those two functions together, level setting, and ensuring that a shared understanding is reached of what's important is, I think, really important. And other, obviously, functions within the organization have to be involved too. Those may obviously involve corporate secretarial, in addition to communications and others, along with the strategy and risk teams. We've also set out a clear set of disclosure principles for these long-term plans to really try to help companies focus within the themes that we ask for disclosure on important value-relevant information. So a couple of items to highlight there, that we want the presentation to be focused by materiality, really focusing on those elements of the business which drive value. We want an integrated discussion so that issues like sustainability and ESG more broadly are not presented as a silo, but are embedded into strategy and expectations of performance. And given that it is a long-term plan, we want a significant amount of forward-looking information, goals, metrics, milestones, strategic objectives that allow the investors to understand what the broad heads of strategy is, what the broad direction of value of the business is. In helping these companies prepare for the CEO investor forums, we run a consultancy style briefing process with them where we walk companies through the framework, and also we bring together feedback from the institutional investors in the room to then convey to the companies after their presentation. So we have this continuous feedback loop where the companies are receiving feedback from the key constituency of these long-term plans, their institutional investors, and can continue to improve their disclosures over time. And we have seen companies using this interaction with the long-term plan as a means of expanding the type of themes that they report out to the markets, and that some of the internal collaborations that have been built to help deliver these long-term plans have then continued, enabling the company to deliver a more coherent story over the long term. Moving to the next slide, over to Edelman to talk about their terrific work on the Trust Barometer.
Hi, Lex, you might be on mute. Great. Well, Brian, I can jump in on this, and Lex, feel free to join in as well. But I'm not sure if everyone on the call is aware, but Edelman each year has an annual Trust Barometer that we release in January, and then over the past 2 years or so, we've been implementing a subset of this study, which is focused primarily on investor trust. And so, one of the key findings that we have from this year is that, the long-term outlook is critical to investor trust. This has been something that, you hear about often, but it's nice to have some data to back it up. And so, 96% of the investors that we surveyed found that long-term guidance has an impact on financial performance, and 66% said that it has a great deal of impact on the trust in the company. In the most recent data, 84% agree that I trust a company that provides forward-looking guidance, even if they miss occasionally, more than I would trust a company that provides no forward-looking information. And so the read-through for us is that it's very important to set out a long-term framework and really focus on on where the company plans to go over the next 5 years and beyond, rather than just on near-term metrics. We can click through to the next slide, Brian. Okay, so perfect. So, when thinking about long-term valuation, we ask companies to select, what is most important, whether it's the growth strategy, how they evaluate risk, technology and innovation, ESG factors. And so these are all different elements which we will discuss within the kind of the CECP long-term framework. But it's kind of helpful here to see how things rank. We've got the growth strategy as the most important factor, but definitely focused on overall risk as well as the innovation pipeline. So some of the data in here hopefully can help as you think about what elements to focus on and what investors are really thinking about when they focus on your long-term valuation. I think Lex, if you're on, if you wanted to jump in and say anything else about trust, otherwise I'll hand it back to Brian.
You got it. Sorry about that. I had a technical difficulty, and I was freaking out on my end trying to fix it. Just dialed back in, so now we're good. Lauren, did you cover the expect active as a myth slide?
I didn't. Nope, I did not.
Okay. Well, Lauren, you did a great job talking about the earlier slides. 600 institutional investors, over $9 trillion in AUM answering this survey. In prior years, we've asked, are companies prepared for activism? And over 90% have said no, the companies are not prepared for activism. This year, we asked, why? Why are they not prepared for activism? And this list, which is the 9th slide, expect active as a myth, gives the answers. And it's fascinating to see how well this matches up with the CECP's framework for telling a long-term narrative. Top on the list, define and specify new and emerging areas of risk and value creation. So investors want to hear what is on the cusp of value creation for your company. They want to understand what the risks are. They want to understand where is the value creation going to come from in the future. Second, clearly communicate a credible growth strategy. That is central to a long-term narrative and a long-term story for your company. And then look at the second to last, detail board-level oversight and governance, as well as articulate potential changes over time. Obviously, that one feeds right into an area that activists are often focused on. Brian?
Thank you, Lex. That's great. Moving to the next slide. What we wanted to do now is talk a little bit more about the long-term plan content framework that we developed at CECP, and then to illustrate some of the underlying examples from some of the 30 companies that have delivered long-term plans to date. So on the next slide, you will see our long-term plan content framework. This was developed in collaboration with KKS Advisors and Professor George Serafeim of Harvard Business School. As you'll see, it sets out 9 themes for an effective long-term plan and has 22 line items underlying each of those themes. I did want to highlight, as Lex has just said, just the clear correspondence between these themes and the themes that Lex commented on in terms of being ready for an activist. This is something that we talk to companies about all the time. If you set out a long-term value story, cover these key points, you are likely to be better placed to push back an activist and to have a meaningful story to tell to your investors, because ultimately you have been communicating it consistently over time. So you see that in our talk of risks, long-term capital allocation, having a key framework for responding to stakeholder and particularly shareholder concerns, and then an increased importance of board oversight. So this framework also draws on the feedback that we receive from the CEOs that we engage with, key elements that they see to communicate their long-term narrative to the markets, and also key expectations from institutional investors. As I said, we obtain feedback from institutional investors at each of our CEO investor forums, and that feedback keeps this content framework fresh. And
Brian, can I add one point there?
please go ahead.
I think for anybody who works for a public company on the phone and you're involved in the quarterly earnings process, obviously, and investors are asking about the quarter. They're asking what happened in the quarter. They're asking about what's happening in the next quarter. Maybe they're asking about what your expectations are for the year ahead. So when we talk to clients about telling a long-term story, I'm thinking of one CFO, for example. We said, you know, this is really something you should be doing in order to cultivate long-term investors. He completely agreed in principle. And he said, okay, so how do I do that? I think a lot of C-suite executives out there absolutely would like to cultivate long-term investors, but they feel trapped by the quarterly earnings process. This framework that Brian was just walking through is a roadmap. It's a starting point. So when your CFO or your CEO or your IRO says, okay, how do I do that? This framework is a starting point in order to start that conversation and make it happen at your company. Sorry, Brian.
Yeah, that's right. And we've heard that the companies that we've engaged on this framework have used this framework as a way of engaging internally. Because ultimately, you know, to disclose new things, you have to do new things. And this framework can be a way of ensuring more cross-team collaboration, and is also a great overview in terms of the strategic planning content of the board's engagement. So we certainly heard that preparing a long-term plan, again, and engaging with these themes and the key elements to disclose against it is a great way of getting the board more deeply involved in long-term strategy and really being a strategic partner to the management team on that. So moving to the next slide, one of the things that we wanted to do was just pick up some of the underlying examples from the presentations that we've received to date, and we wanted to highlight a few of the themes which we'll walk through there in bold there. And as you can see, these themes are essentially a mix of themes that you might expect to see in a traditional investor relations deck, combined with broader strategy disclosures and also elements that have up till now often been confined to a sustainability report. So it really is a broader set of value items being discussed. So moving to the next slide, I wanted to focus briefly on megatrends. As you can see, this sets out the guidance that we provide to companies in the framework. So to talk about those large long-term trends that impact the company, ultimately those are often going to be a mix of planet scale megatrends and also then the key intra-industry megatrends. We ask companies to then describe how they are responding to those trends. And this is really an opportunity also to build on some of the disclosures that take place in terms of things like known trends and uncertainties in the 10K. So moving to the next slide, you'll see some examples from some of the underlying presentations. As we've seen, we've had utilities that want to engage in a conversation around the transition to the low carbon economy, achieving science-based targets, changing their energy generation mix to respond to the broad trend of climate change. We've seen healthcare companies talking about how aging populations and the rise of an emerging middle class is going to cause a significant expansion for the demand of healthcare services. You've also seen really useful disclosures like that contained on the Delphi slide. Was an automotive company where they look at how the intra-industry megatrends change in intensity over time. And then what the best companies have done here is they've then talked about how their strategy and their long-term capital allocation have responded to those trends. So how is strategy responding to those trends, and then how are they allocating capital to fund the business to respond to those trends over time and turn these into opportunities.
Brian, one thing to add to that is this category in and of itself demonstrates to investors or anybody listening that the management team is thinking long-term for the benefit of the business. If anyone on the phone who's built an investor deck or written an investor script before, it's very rare that companies really think ahead and talk openly about these big trends, these mega trends. And if done right, they can show the promise of a strategy or show the promise and potential as a company manages through disruption. This is a very, very clear way for a management team to demonstrate that they're thinking longer term about where the business is going. And then it obviously indicates that the company's thinking about how to position itself to succeed given those trends.
Thanks, Lex. Moving on to the next slide, we'll talk about corporate purpose. Again, this is another opportunity for a company to, signal a long-term stakeholder outlook, how it's going to create value over the long term. We ask companies to describe how their corporate purpose connects to long-term strategy. And we see that that's really important, that companies need a focused sense of purpose tied directly to the core business. I think there's always a danger that a very generalized statement of purpose sounds a little bit like all things to all people. And there is evidence out there that firms that have high purpose and clarity around that purpose tend to outperform. And also there's an indication that having a strong sense of purpose is going to be very important for the attraction and retention of employees. So we ask also for examples of how companies are operationalizing that purpose within the business to take it beyond a broad statement and to indicate how it affects the day-to-day operations. So moving
Brian,
to,
just to add to that, you made the point about how employees are looking to their employers for a clear statement of purpose. The latest Edelman Trust Barometer research clearly shows that employees are looking for exactly that, because they want to know that their own work has purpose, and how can that be if the employer itself doesn't have a clear statement. But the other aspect of this that's really important, when companies are tested during a crisis, when they're tested during a massive disruption, or when they're tested if there's even as specific as a code of conduct violation, for example, it's a clear set of values and a clear corporate purpose that they can then fall back on to light the way forward and to help a management team or help a group of employees figure out what are the right steps forward in order for the company to advance, progress, and if in a crisis, to recuperate and to recover. And investors know that. Investors know that having a foundation of a strong purpose and strong values is a bedrock for being able to withstand difficult times.
That's great. And that's one of the ways in which companies really can preserve their mission and their long-term approach from short-term pressures. Moving to the next slide, there are examples of companies that have also at the board level begun to issue statements of purpose, where the board is setting out a clear corporate purpose and the time horizon, the key time horizon for the company, again, to give management essentially air cover to manage for the long term and to avoid being thrown off course by short-term pressures or crises. As you can see here, a range of examples from companies that have presented at our CEO Investor Forum, where, healthcare company identifying a clear health-related purpose and relating that to strategy and then the priorities to be delivered. An aviation company indicating how culture enables it to feed product differentiation. And then again, other companies such as Unilever and Johnson & Johnson that have really sought to identify a underlying founder-developed purpose that keeps the business on track and is kind of the North Star for how the business is managed and run. And we have seen other sort of salient examples of how purpose is operationalized within the business. This is an ongoing conversation that I think companies need to continue to work on so that their statements of purpose are refined and relevant and produce the benefits that they hope in terms of preserving long-term outlook and engaging employees. But I think these are all interesting examples. And as indicated, these presentations are also available on our website. So if people want to do a deeper dive into these presentations, they can. Lex and Lauren, did you have any additions on corporate purpose?
No, that's good. Thank you, Brian.
Okay, moving to the next slide. So as I mentioned in the earlier principles-based guidance that we set out for companies, we want them to set out an integrated discussion for how they are managing risks and opportunities. We wanted here to highlight the role of managing ESG risks and opportunities here. It's very important for companies to embed ESG into their risk analysis and to explain the frameworks that they use for identifying and managing those issues. On the next slide, you will see a couple of examples. The one from Nestle that we thought was particularly interesting. This really gets beyond the idea of sustainability being presented as a silo or a list of awards. This allows investors to understand the way in which a company is engaging with its key financially material ESG issues, and then using that framework to then talk about some of the key initiatives and measures that are being taken to manage those risks and create business opportunities underlying them. Important and useful to not only disclose the framework and provide examples of how that framework adjusts business mix, capital allocation, and other items, but also important to indicate, the process through which that those issues are considered. Was the board involved? With what periodicity is this being reviewed? Which teams are involved in generating it? So this is clearly, not just an appealing visual, but it is indicative of how the business is being managed and how risks and opportunities are being operationalized.
Brian, to add to that, these examples on slide 18, the materiality assessment, this is a rapidly emerging practice for public companies as a part of more effectively identifying the issues, particularly in the ESG realm, that the company should focus on. So for those of you in the audience that have not, working for companies that have not conducted some kind of materiality assessment as a part of better informing your ESG initiatives, this is something to really consider. There's many different approaches. You can do a light version, you can do a much more comprehensive version, but it's essential to being able to have a robust, substantive ESG discussion with more sophisticated investors, because investors themselves are they're expecting the companies that they're investing in to make choices around the topics of ESG in a way that are more material for the business. It's nice for a company to use a foundation to give away money to good causes, but what they're increasingly more focused on is companies that are identifying initiatives that are useful for their business, that are useful for the environment in which they're conducting business, so that ultimately the company and its stakeholders can be more successful. So for those of you who aren't aware or haven't conducted a materiality assessment, it's highly recommended to look into this.
Thank you, Lex. And moving to the next slide. So this is an opportunity for a company to build on the disclosures around its competitive positioning and capital allocation, and to indicate what are the key strategies it will employ to deliver value over the long term. This is an opportunity. We give companies a lot of flexibility here as to the elements that they want to focus on. So a key element to this is how innovation and new technology is being addressed, the balance between M&A and organic growth, and indeed thinking about the mix of portfolio businesses and how that strategy adjusts over time. Also, in this sort of complex world of value creation, the key elements of strategic partnerships and collaborations. So a lot of content for companies to digest, but to really give them flexibility as to how they talk about the key elements that will drive their value over the long term. So on the next slide, you see some examples from some of the presentations. Unilever, identifying the key elements underlying their growth as part of their sustainable living plan. Obviously, this is just one slide from a larger presentation. We're just indicating the key heads of the how it's going to both strengthen its operational ecosystem and an indication as well that the elements of the sustainable living plan are kind of being managed in a meaningful way. BD's slide, very interesting example of how a company is accessing new geographies and new markets through collaborations, again, to drive value as being one example of an underlying strategy for its business. Again, just examples from a rich set of presentations, but great to have companies doing this. And again, we don't want to be too prescriptive in terms of the guidance that we provide to companies. We just really want them to talk about how they are making their choices, how they are prioritizing, and also the time horizon over which strategy is being implemented. As we've said many times on this presentation, there is a concern that a lot of the existing discourse around value is rather short-term, and here's an opportunity for companies to identify the ways in which they're going to both apply capital and innovate over the long term, and also respond to some of the underlying megatrends that their business faces. So this is an opportunity to kind of wrap together all of the elements of strategy that they've previously outlined.
Brian, just to jump in here. So, I mean, in my conversations with companies and with research analysts, this is really the one of the top things that people are focused on. They want a clear kind of plan on a page for how you will grow into the future, what levers you can pull. And, if you're putting up great numbers now, that's great, but you'll see, I'm sure you've all heard on your investor calls or, in meetings with investors and analysts, they want to know what's next and how you'll continue to grow and how you'll continue to evolve. And so, trying to find a way to kind of put a plan on a page with some context around it was really crucial to being able to tell the long-term value story.
Thanks, Lauren. Next slide, please. Okay, over to Lex and
Yeah.
Lauren for human capital.
For sure. I'll jump in on this one. So the next framework element is human capital. So just to reference back to Edelman's investment trust study, one of the findings from our most recent survey that's really telling is that, we asked everyone, when you think about building trust with various corporate stakeholders, for investors, attracting and retaining talent was the most important audience that they cited as building trust with. It ranked above attracting new customers to grow market share. It ranked above increasing valuation, and it ranked above attracting new investors. So, the concept of talent acquisition and retention is something that is definitely a high priority. When we, when thinking about how to discuss human capital and how it relates to your firm, we encourage you to describe your employee strategy and your engagement and employee experience practices in the context of the long-term strategy. Outline some key initiatives and metrics that are specific to your industry and to your business model. Give examples of how these initiatives will then, connect to the driving long-term financial performance. And then ultimately just provide commentary around the role of the management team and board and the oversight of talent management. And succession planning is also an element of this as well when you're thinking about CEO succession and how you'll continue to drive the business going forward from a people standpoint. If you just want to click to the next slide. We have a couple of examples here, and they show some different elements. So looking first at Equinix, they really led with stats and data, which can be really helpful. So they focused on employee satisfaction and showing how they rank in comparison to the industry average, and then also looking at turnover rates of employees and how they've trended over time, again outperforming the industry. JetBlue was a great example. They one of the biggest challenges that they're facing as a company moving forward is recruiting pilots. Apparently the cost to become a pilot is very high. So when students are going through school and thinking about where they want to drive their professional career, it really limits their ability to get into this profession. And it also causes a lack of diversity. So they've identified this as one of their key growth initiatives within the human capital space. They've introduced a pilot gateway program, which you'll see a summary on this slide, which takes people with no flying experience from all different backgrounds and turns them into pilots. So this is something that's a big focus for them and really resonated well within the human capital standpoint. Aetna, another example, focusing on investing and attracting talent through different initiatives such as wellness programs, increased base wages, and health benefits. So this is just a few examples of different ways from both the statistical standpoint as well as more qualitative standpoint that you could talk about attracting and retaining talent. Lex, I'll pass it to you. I don't know if you have anything else on this topic or pass it to you for the next one.
Yep, I'll quickly cover corporate governance, and we're almost to the end. Recent corporate crises in many industries and many companies have shined a light on governance inadequacies, whether it's oversight of the board, composition of the board, or board committees, or combined chairman and CEO, you name it. There's a lot. All of that's in question at the moment. So companies are now finding ways to be proactive about modernizing their corporate governance and their board structure, their board composition. That leads them to wanting to talk about it. And as we all know, it's the stewardship and governance people within large institutional investors that are the primary target audience for that. So large companies have made a lot of progress doing what's called governance roadshows to those segments of the investor population. Small and medium-sized companies have more work to do. Among the companies that I work with, large companies have this covered, many of them, not all. Small and medium-sized companies are not as proactive around this and often don't have a clear narrative around their governance strategy. However, investors in the Investor Trust Survey have told us that they need to trust a board before they invest, a board specifically. And in particular, they want the board to be engaged. question is, how do they know that the board is engaged? They'll know it firsthand, but also the board itself ends up having a little bit of a reputation. So companies are getting more sophisticated. Those that are really thinking about this are getting more sophisticated in talking about their board expertise, in demonstrating that their board is engaged. If you flip to the next slide that shows two examples, left and right, look at the Medtronic example on the left. This is showing in a really simple but very compelling way the way that this company and its board is engaging with strategy oversight, which we've heard Larry Fink and BlackRock talk about at length, engaging with customers in order to better understand the preferences and needs of the customers, engaging with members of management and the executive team to ensure that the management and the executive team are functioning in the way that the board would expect. It's a very compelling way to convey the notion of engagement of the board of directors. This is something for everyone on the call to consider. On the right side, the PSEG slide. So many companies have in their proxy a checklist of the main categories of expertise that their board fulfills. But this one, it's hard to read it. Anyone can look for the PSEG governance deck so you can see this in detail. I'll read it to you though. This little dot chart on the right, it covers accounting and finance, construction engineering, corporate governance, customer satisfaction, environment and science, government policy, plant operations, legal, management, manufacturing, product development, risk management, tech, and cybersecurity. That's the text that you can't see on the right side. And it's showing the areas of expertise that the board matches with that list of very customized areas of expertise. So this is a more advanced, more tailored, more sophisticated way to speak to your investors about exactly the areas of expertise that the company expects from the board and who on the board fulfills those key areas. The next slide are just a few additional examples to consider. Brian, I think I'll hand it over to you.
Thank you, Lex. Next slide, please. So we wanted to highlight that our next CEO Investor Forum coming up is in February 2020. We'll have 4 companies coming to present long-term plans. Again, new companies from a range of different sectors coming to experiment with this practice of setting out a longer-term value narrative and trying to address some of the elements of our value creation framework. You can use the link in that slide to register for that event. It's a free event. And as ever, we'll have an excellent selection of institutional investors represented in the room. It's a great opportunity to engage with the CEOs that are present. The long-term plans enable Q&A directly with the CEO. So again, great engagement opportunity for institutional investors with a range of CEOs. So next slide, please. So we wanted to end with a few minutes of Q&A. Any Q&A that we can't get to, we'll obviously address with our registrants later on. So one of the questions was, what are the potential downsides to creating long-term plans? And a second question was, our business is already long-term focused. We just announced long-term strategies. Do we need to do this? I'll answer this first, and then Lex and Lauren, if you could chime in. We meet companies at varying stages of maturity on this. In terms of the long-term plans that we've had to date, we've seen a lot of concentration in terms of healthcare companies, utilities, and financial services firms. So, you have companies from sectors that naturally have longer term time horizons, and so are kind of maybe more comfortable talking about a longer term story. You also have companies that inevitably face more license to operate issues given the sort of social and environmental impact of their business model. So it's important for those to get out in front and talk about these issues. So, you know, there's that sense in which some companies are more primed to engage with the long-term strategic story. However, we do think this is something that, you know, all companies should be doing. You know, there is a clear investor demand for a longer-term time horizon. In order to address that longer-term time horizon, you know, it's going to be important to talk about the clear E, S, and G issues that underlie your long-term performance. So I think this is something that all companies should be doing. You know, I think as ever, you know, companies want to, you know, be mindful and tread cautiously in terms of, you know, how they disclose and what they disclose. But, you know, I think there are both, you know, these internal process benefits for companies in preparing a long-term plan. And then there are also, you know, increasingly clear capital markets benefits. You know, that one that I identified earlier, that as you know, address a longer-term time horizon in your disclosures, you start to attract a more longer-term investor base, is something that should be particularly appealing to many companies. Lex and Lauren, do you want to address those?
Yeah, for sure. And I think, and this also ties into, there's another question in the queue around the legal implications about, you know, being out there publicly with a long-term plan, you know, as you think about the potential downsides. But, you know, it really goes back to short-termism versus long-termism. And as we found, you know, back on slide 7 with our investor trust survey, investors trust a company that focuses on providing a long-term plan. Even if they occasionally miss short-term guidance, they trust that much more and much, you know, they have more faith in the company if they can provide this long-term outlook. So, you know, as Brian mentioned, there's certainly, you know, you need to be thoughtful about putting out a long-term plan. You also don't need to necessarily provide long-term detailed financial guidance. It's more than that. It's much more qualitative, and they just want to know that there's a thought process and that there's considerations for how to sustain the business moving forward.
Yeah, that's right. And we ask for a range of sort of goals, metrics, and milestones in terms of these long-term plans. A lot of that is about just setting out a clear strategic direction. You know, there have been a range of forward-looking metrics that companies have provided. You know, a minority of companies issue long-term financial guidance, but we've also had clear goals in terms of, for instance, you know, diversity targets, both within the workforce and at the board level. Also clear targets in terms of the E part of the ESG spectrum, such as, you know, GHG reduction targets from utilities. So there's been, you know, a range of operational, financial, and strategic metrics that companies have wanted to share to indicate their, you know, their KPIs and also their clear strategic direction. There is a question here on the legal implications. Obviously, we expect, you know, companies to, you know, talk to their outside counsel and their general counsel about the type of disclosures that they make. You know, there is a broad and permissive safe harbor for companies to take advantage of in terms of forward-looking information, which our companies take advantage of when they make these disclosures. There's a question here on the research on corporate governance. Again, we want to give companies, you know, an opportunity to talk about their governance arrangements and how those are set up to enable the company to focus on long-term value. The slides that Lex described earlier are a really useful way of companies doing that, so that they give their institutional investors a basis for engagement in terms of their corporate governance arrangements. So look, we've reached the end of our time on the webinar. I wanted to thank you all for the engagement. We had over 100 people register for this webinar today, and very much appreciate all of the engagement that we've received from you all. We will try to address any questions that we missed. My huge thanks to Lex and Lauren from Edelman for all their work leading up to this webinar and the great work that they do. Terrific partners for us at CECP. So thank you all for your time today. And if you did have time to complete our NPS poll that's just appeared on your screen, we'd very much appreciate it. But thank you very much for all your time and engagement.
Thank you, Brian. Thank you, everybody.